I think that Bitcoin is designed to test your conviction. I think that Bitcoin is designed to test your understanding of it. In this market, the price makes the narrative. And when the price is going up, there's euphoria, there's FOMO, there's this desire to be involved and not miss out. And then when it's going down, there's this panic, this disbelief, this feeling that it's all going to end. And every time the price is going up, there's very sophisticated analysts that call for higher prices that are usually unattainable. And when it's going down, there's usually the same analysts calling for lower prices that usually never get hit. Either way, this journey teaches you in the times of fear to understand what it is that this asset represents. And it represents a growing network which is being adopted by institutions, by sovereign wealth funds, by corporations on their treasuries, by high net worth individuals, and also being adopted by a majority of retail investors who are starting to understand that as they hold currency units such as fiat currencies, their purchasing power over time goes down. And so I like to present these weekly charts, the MVRV, the Pi Cycle Top, the Maya multiple, and then also today we'll look at the net unrealized profit and loss, the NUPL. But at the same time, it's just understanding the fundamentals of what this asset represents and how a long-term mindset is what you really need to hold this asset. I wouldn't encourage anyone to buy this asset unless you understand what it represents. And it's just, in very simple terms, decentralized automated code that functions as a modern-day central bank, and it provides a unit of account that cannot be corrupted, that cannot be inflated, and that finite digital supply can never grow beyond the Genesis block, which is 21 million Bitcoin, to be released over the next 110 years. So let's get away from the noise of the euphoria, the excitement, the FOMO, and also the fear, the greed, it's all going to zero, it's going to end, and actually understand the noise can distract you from understanding the opportunity and the entry and the time horizon that you should have this asset for. Let's look at the signals, and the signals are clear. So this liquidation event was incredibly disheartening for a lot of traders that had leveraged their accounts were liquidated. I think over 711,000 liquidations happened this day. This was the largest liquidation event ever, and it actually isn't recorded, but it goes up to about 10 billion in terms of liquidations in one single day. So this event has definitely shocked the market. It's led to capitulation, but it is just noise. It is orchestrated. It is market makers actually driving down the price using the tariff and the DeepSeek news to panic people into selling. And as they trigger these liquidations, it's a market sell, which just leads to these cascading moves down, which aren't natural because that level of panic that quickly isn't something that's natural in a pattern. It's something that's created and it's artificial. So you can see that that's led to a lot of noise about the fear of where this asset's going and whether it's worth anything, and actually still the fundamentals are clear. So let's have a look at the adoption of states. We currently have 27 US states that have put forward legislation for a Bitcoin reserve, and that is the signal. The noise is the price. The noise is it's going to 1 million, it's going down to 50,000. The signal is that these states that represent large amounts of capital are starting to position themselves to potentially start buying this asset as a part of their treasuries. They won't sell this. It'll be something that they hold on to. As we continue, you can see the legislation process. It's like a horse race. You can see how they go from the public endorsement, the bill introduced, and all the way to being signed into law. Now, there is not a state yet that has managed to sign this into law, but once that happens, which I believe it will happen this year, this could be massive, and it would just lead to this perpetual bid as these states all realize that they need to have some allocation to this asset, which is finite. There's only so much of it. You can see here that South Dakota has the shortest legislative process, so they most likely could be the first state to adopt this as a treasury reserve asset, which is, again, absolutely massive because this could be around the corner. David Bailey, a strategist who understands Bitcoin and is in communication with the current administration and is able to persuade this administration to start understanding that Bitcoin as a strategic reserve asset could be very powerful for the US dollar, going forward into the next stage of innovation, which is going to be the digital ecosystem that we live on. He's really trying to explain that the top priority for this administration is to install the right people to create this Bitcoin strategic reserve over the next 80 days, and it is a top priority. That's the signal that these officials, these people in powerful positions are starting to make legislation that will support the adoption of a Bitcoin strategic reserve. So that's the signal. Another signal is Polymarket, which has been very accurate from being able to predict the outcome of the US elections very accurately, being able to predict all sorts of different aspects of culture, but it's just people put their money into these decisions. And as this grows, the likelihood of a Bitcoin strategic reserve in 2025 is starting to increase. And this is, again, a signal. This is not something that is time sensitive, because if this happens, this is going to be a perpetual long-term adopted sovereign asset that will be constantly bid over the next 10, 20 years. Again, you can see the countries that are starting to adopt this as a treasury asset. You've got Argentina, Brazil, and the country that have made this happen is El Salvador, as the Bitcoin capital of South America. And then you can see all of the other countries, powerful countries that are starting to really consider this. Hong Kong, where I live, Japan, the United States, Russia, Poland. You can see here the public company Semler Scientific have managed to acquire 871 Bitcoin. And this is just something that can't continue at this rate, because if it does, there's just going to be a shortage at some point. There is not enough Bitcoin to go around. You can see there's more treasuries. All of these treasuries that currently hold large quantities of Bitcoin. And the signal is that these corporations, these people, these exchanges, these family asset managers, they are starting to just acquire so much of this asset that there is only so much that can go around. The impact that it can have on the stock price of a company once it's adopted as a treasury reserve asset, it can really lead to the stock price outperforming other companies in its index. Hash rates growing, another signal that this network's being adopted, that the amount of computational power required to create new blocks is growing. As the algorithms that solve these computational problems, it gets harder, the difficulty adjustment gets harder. It means that the hash that's required is going up. And as that goes up, it usually leads to a higher price. And that's the signal. Now, is that going to happen tomorrow? I don't know. Is it going to happen next week? I don't know. I don't care about whether it happens today, tomorrow, next week. It's about the long-term understanding that the increase is going to be quite certain as these signals start to play. This is a really interesting passage that I managed to find. And it says day traders considered themselves successful if they bought a stock at $10 and sold for $11, bought it back the next week at $24 and sold at $25, bought it back a week later at $39 and sold it at $40. If you can't see the flaw in this, that the trader made $3 in a stock that appreciated $30, then it's hard to understand why holding an asset that is so volatile can be more beneficial than trying to trade around it. Unless you have the sophisticated tools, but most people fail at being able to do that. Holding it, set it and forget it, and just understand that over time it is going to be worth more if you have that long time horizon. That's all you need to do. Now, let's go through the charts. We've got the MVRV, we've got the Pi Cycle top, we've got the Mayer multiple, and then we've got the Newport, just to see where we are and if the fusing the signals long-term with the short-term indicators can show whether there's still room for this asset to move up based on historic patterns. Okay, let's start off with the MVRV score, which is the market value of the realized value. And you can see that it usually spikes through this red area, which is over 7. However, these were the early days of the cycles where it would be extremely volatile and it was still a very young asset class. Whereas now you can see the returns are diminishing. The last cycle it only managed to get to 7, and that was around 60,000. So I would say that if you were to judge this in a more diminishing returns type way, we're probably going to get close to 5, maybe, just over 4. But you can see there's still room to grow because currently we're at 2.4. That means that a $96,000 Bitcoin, 2.4 MVRV score means that there's still probably a bit more room to run. So when it starts to move into that 4 to the 5, that's where you consider taking lifestyle chips off the table, or maybe even just not investing and waiting until it does correct. If you have a long-term time horizon, you just dollar cost average as often as you can, because you're not really going to be bothered about the daily fluctuations. But if you're about to add a large amount, this is probably a risky time to do it, because that reward is going to be less at the shorter time frames. Moving over to the Pi cycle top, this is where the 111-day moving average, the blue band, crosses over the 350-day moving average. And when they start to touch, that's usually where days after you get that top of the cycle. And it's happened in the previous cycles every time. It's been extremely accurate. So at this point, we're not close to touching. We're quite far away. These bands have not compressed together yet. So it's another indicator that's very reliable that shows that there's still room for this asset to grow in this cycle, in this year. Moving over to the Mayer multiple, it's always gone over that green line, which represents 2.4, which shows an overheated, overbought market. At the moment, we're still under that green line, so we're still in an oversold market. There's still room for expansion. And that current level is 1.25. So we're still quite far away from that line. And just getting close to that line would signal euphoria. It would probably be a moment where you'd feel levels of greed and FOMO that you should reflect on and go, okay, this is probably where the cycle is going to end for now, and it's probably going to go on a downturn. And the final one is the net unrealized profit and loss. And this isn't yet over 75%. And when it gets to 75%, historically, that's usually where we get into euphoria and we get into greed. The unrealized profit that people have made, the screenshots that people are taking and displaying all over their social media, is when you start to see that profit is high. Usually that's where most people have managed to buy into the asset for this cycle, and it's going to go on a downturn at that point. None of this is science. It's all just indicators that can use historical patterns and then rhyme those patterns into the future. It gives me a North Star that helps me understand, okay, the on-chain data, the on-chain analytics show that there's still room for this asset to continue to run. So why would I worry at this point if I can just use some of these indicators to give me a little bit more objectivity? Could it be relevant? I think that as this asset starts to get adopted by more and more people and you start to see the mindset change, you understand that the long-term value of Bitcoin is becoming more fundamentally clear. This headline stuck out to me. It was "Parents ditch the 529 plans and embrace Bitcoin for college savings." Starting to see that the gains that come from holding this asset class could outperform the typical index that they would dollar cost average into to save up for their children's college funds. It's just something that they're starting to consider, and it's starting to become increasingly more clear. You can see how every single asset just compared to Bitcoin is trending to zero. The NASDAQ, gold, the S&P 500, specific stocks, they're all trading. You can see these lines represent all of these assets just going down in Bitcoin value. And then the traditional assets, return on investment, and Bitcoin. Bitcoin, since its inception, has managed to outperform, and in its 14-year period, it's gone up 11 million%. It's an alien asset class that just hasn't ever existed traditionally. And then in that same time, the S&P 500 has gone up 356%, which is still good. And gold has gone up 100%. So when you see the difference in the potential of holding and just having a bit of exposure to this asset, you realize just how much it could have an impact on your overall net worth over time. And then the final picture, The signal for me that causes me to hold this asset, and I just set it and forget it. I look at the price for other reasons. It gives me an idea of what's happening in the markets, broader markets, because Bitcoin's a great indicator of that because it's 24/7. It's always trading. But there'll never be a day where I don't want to have exposure to this asset. I'll never try and trade around to accumulate more of it. I would always have some that I just do not sell, that I hold on to, that is like a property in cyberspace. It's something that I don't need to sell. It's something that I can take with me wherever I am in the world, whichever jurisdiction that I'm living in. And against the price of dollars, when you see in 2016, it took 664 Bitcoin to buy an average house. And now in 2024, it only takes 6.6. Whereas the price in dollars has gone up. It would be more expensive if you were using dollars and saving in dollars to buy a house. Whereas if you were saving in Bitcoin, you can see how it's dramatically come down. So again, this video hopefully has had some impact on your understanding fundamentally. If you got any value from this video, please like, subscribe, and share with anyone who might find this interesting. Again, the main aim is just to try and express the importance of maybe having some exposure to this asset class, or at least understanding why it's got value, why it fundamentally will, if you can just stretch that time horizon out long enough, if you're not planning to leave your job anytime soon and retire tomorrow, then just having exposure to this asset class as you continue working, as you continue doing what you love, whatever that is, it's going to have a long-term impact on your wealth. And it will, just because the Federal Reserve, the central banks, need to continue stimulating the economy. They still need to add and print fiat currencies. And the best mechanism to absorb that inflation, and it's proven just based on the growth of this asset, is Bitcoin. It's one of the best anyway. So I hope you got some value from this video. Like, subscribe, and I'll see you in the next one. Thank you very much.